Yes, welcome back to another episode, back again at Dennis Trades. So, you have been looking for a strategy that can work for you. Many of us are busy, some people are part time traders, sometimes are full time traders, and it is very, very important that we spend less time on charts. Well, today in this video, I have a strategy for you. One of the best strategies with a win rate of about 60%, meaning you can be persistent in the market. So with this strategy, you're only going to be trading for 90 minutes. Yeah, and that's all you will need to get into it. So without wasting much of your time, let's get into it. Well, so this is one model, one session, and it will be targeting specifically the New York session. So we'll have a trade, we'll have a full trading plan and a checklist. And as you can see here, these are one of the trades you can be able to take if you follow all the rules and really understand everything. Yeah, so you can see clearly what we are going for. And for this, it's really a good strategy whereby if you're consistent, you have your good psychology in check, you can actually catch all these trades. Of course, you'll be taking partials at the buy side, liquidity side, since we'll be expecting some retracements. For those on prop farms, you would have to manage your risk to beat the 5% daily drawdown rule. Yeah, so those are the different aspects you have to look through as a trader. Yeah, but for this model, it's really worth your time. So without even wasting much time, let's get into it. Yeah, so for step one, this is a mechanical model. You know, most of the people come here with discretionary strategies whereby you can't even follow it. They are claiming it's due to experience and all that, but this is a mechanical model whereby it's a step by step in order to execute your trade every single time, every single day in a session, and we'll be aiming at the New York session. Yeah, so we are having the time-based liquidity whereby we'll have the previous week low and high. Yes, we'll also mark out the previous day's high and low. We'll mark out the previous sessions. Yes, if you haven't watched our sessions video, it's on the channel. So you watch the highs and the lows of Asia, London, and New York. You have to look through all that and mark them out. Then you have to mark the market structure in the minute 15 and the M5. So I think let us go to the chart side of this so that we understand this very well. Yes, so we can always mark out for our time-based session, you can always mark out. So let's say for this example, since we last had our winning trade on Friday, so I'll try to use this chart example. So this week we haven't had that trade, so this would be the previous week's high. If we are to deal with our trade on Friday, this would be the previous week high and also the previous week's low. Yeah, you can see. Then, yeah, since it was a Friday, this would be our previous week's high and the previous. This would be our previous day's high, and then this would be our previous day's low, as you can see. So these would be potential targets, as you can see. So for this day, you could hold your trade even targeting the previous week's high. Yeah, so we can clear also go back to the time-based liquidity whereby you have the sessions. So for our sessions, yes, we have an indicator here whereby I had to find it out. It's called the ICTQ zones plus pivots. So you would have to really search this, type it in and get it. So yeah, this is the magic. So since our trade happened on a Friday, yeah, So yeah, this is it. So on this case, since you are trading the New York, by the time we reached our New York, this previous day's high would have been not of use to us. It wouldn't be a target since it would have been cleared. Yes, but our previous day's low would be a target if we were bearish. Yeah, and also we have our previous week's low, and then yes, bear with me a bit. Yeah, then we also have our previous week's high, which would be our target for the bullish market. Yeah, so this indicator would clearly show you the Asia, the London. Yeah, and then at this time we start trading at 9:30, and for our time zone we are in the New York session, as you can clearly see. So the session we are interested in is the 9:30 to 11. So that is 1 hour and 30 minutes you would have to trade. So this would be our time-based liquidity, whereby you have our London low, London high, Asia low, as you can see. So we have cleared this part of the Asian liquidity. Now, for those who want settings to this, you can pause. So this is all you need. These are the settings, as you can see. This is the default, so you can actually remove the launch. We're only interested in the AM, and these are the settings, as you can clearly see, the pivots and all that. Yeah, so basically that's that. Yeah, you can pause and get to actually see what you actually want. So yeah, so that is it. That's the style, the visibility. So that is our indicator, and it will come in handy. For this case, you can also take charge of our market structure. Yeah, so as you can clearly see, you can actually mark the high, something like that. So here we are trying to mark our market structure, and for us to be sure of where this market is actually going. So as we can be sure of where this market is actually going. So here we are marking up our structure very well, so that we can be able to tell our market direction. Yeah, so market structure is very important. Yeah, so here price was bullish, bearish, changed character, made bearish, then changed character to bullish. So as you can see, price is fluctuating, but our key goal is that by the time we actually reach the 9:30, we know what our structure is. So this is also a very important part of our strategy. So for our step 2, we have what we call a fair value gap. So in that, we have to identify within our session, within our New York session, we would have to identify the market structure. Is the market bullish? Is it bearish? And we'll have to actually go through the 5-minute structure and the 15-minute structure. And this is because we are day traders. We want that lower time frame so that we get our trade as fast as possible through the trading day. So actually, as you can see here, our market structure, price is moving up. It's a bullish market. So if you have an FVG, yeah, you can actually just wait for a pullback. Yeah, and then make a continuation. So actually, let me show you what an FVG looks like, or a fair value gap on the market. Yes, so as you can see, on this day, we had what we call a fair value gap. So actually, let's mark some fair value gaps. So a fair value gap is let's say these are bearish candles, right? So the difference between this week and this week is what we call an FVG, as you can see. So what we are clearly interested in while trading our strategy is that in this window, do we have some fair value gaps? As you can see here, we formed a fair value gap, but there was clearly no reaction. That's why we didn't have a trade. You can see this bullish momentum. Yeah, so this market's about being patient, and you can clearly see here we had an FVG, or a fair value gap, and it's very important to note that price doesn't close below. So if it closes below, then this would be an invalidated trade. So this is the fair value gap we are looking at. We said we need market structure, and as you can see, this is a bullish market structure. You can see an FVG. You can see price actually reacted. So this is a step-by-step method whereby we are getting all the steps. So identify market structure in 5 or M15. As you have seen the FVG, wait for a retracement into the 5-minute or 15-minute FVG. So that is our step 2, as you have seen in the chart. Now our step 3 is the entry model. So for the entry model, we have what we call fair value gap, inverted fair value gap. So this is a failed fair value gap. So, and it can happen on the 1 minute. You can look for it at the 3 minute. We can look for it on the 5 minute. And yes, so we have what we call, for the entry model, we have what we call an inversion of the fair value gap, or the IFVG. So this is a failed fair value gap. So when price closes below or above a fair value gap, it has been inverted, and that is the entry model. So we can clearly enter an IFVG of 5 minute, 3 minute, and 1 minute, as we can see on the chart. So this is our third step of the entry. So let us put this, let us give a chart example. Yes, so on our Friday, let us put it all together. Yes, on our Friday, we had our Asia session. The Asia session high was swept, and the Asia session low was also swept. So as we went into London, yes, we also had our lows and high. So this is the step of the time-based liquidity. Yes, so when you see here at 9:30, we had our London low. So when the London low was actually swept, as you can clearly see, it was swept at 9:45. So when it was actually swept, we had to go and look at the market structure. We had to wait. Since we are anticipating a reversal at this point, we would have to first wait for structure to align. So as you can clearly see, the structure was bullish. We had our FVG, as you can clearly see. And then we also had equal low, which would act as our liquidity point or targets. So clearly our strategy had to come in place. So on the 15-minute, you can actually go through the 3-minute. Actually, we said 5-minute, so we would check. So our price here has actually come into the fair value gap. So as you can actually see, we have an IFVG here, but I'll be honest, our next, so after learning the entry model of the IFVG, which I can show you in a bit, so I can just show you a random example. So let's say you have this fair value gap. Fair value gap. So after price actually closes above this fair value gap, this becomes what you call an inversion fair value gap, as you can actually see. Yeah, makes sense, right? Now let's go to our checklist. Well, this is the trading checklist that you can actually follow through every session from 2:30 a.m. New York time to from 9:30 a.m. New York time to 11 a.m., which is the New York session. So we'd start off with the trading with the 5 or 15-minute trend. The price has to trade into the IFVG. We also have to get an entry confirmation with the IFVG. Price trades into a 5-minute or 15-minute FVG or fair value gap. We have to get a confirmation with the inverted fair value gap. We have to get a 2-hour next to the next liquidity level, and our stop loss has to be below the displacement leg. So this is the checklist we follow every time we are executing this strategy. So let's get into it. Yes, so to put this into context, you would follow our checklist, whereby we have the first one was to trade with a 5-minute or 15-minute trend. So as you can actually see, after price sweeping our London low, we would anticipate price to reverse. So we wait for the yes, so actually price to, so after taking out our London low, we anticipate it to go bullish or to reverse, right? So on our first checklist, we would trade with a 5-minute trend or 15 trend. So as you can see, this is bullish within our window. We had a bullish trend, right? So this is our step 1 on the checklist. So if the price trades into the 5 or 15 minutes FVG, then we would wait and see how it reacts. So actually you can see price here had to retrace. So after price retrace, we have to go into the 1 minute for an early entry. Yes, so actually when you actually look at the market here, as price is actually trying to turn to our FVG, so we can see that price here try to come to our FVG, and we had an FVG here. So as you can clearly see, this price failed to close above. So when it closes above, then would take the entry. That would become an inverted FVG after the candle close, but we didn't have, so we had to remain patient. Remember, trading is about being patient. So now price moved, retraced deeper, as you can see, And this is the FVG. That price closed above with this black candle. So after price closing above, it would become an IFVG, as you can clearly see. So after price actually closing back, that is our entry confirmation. So we would take a long, and we make sure that we just cover the low. So in order to see that this trade is actually valid, it has to be within 2 hours to our next liquidity level. So actually our next liquidity level ideally would be these equal lows, as you can see there. Yeah, if we would actually take these equal lows. So technically you could take your win up to there, but then according to our checklist for consistency, remember the lower the risk to reward, the higher the win rate. So we'll take our nice 1 to 2. So this is what we do every session. So you just have to follow our checklist, and trust me, with time you get the hang of it and you'll be profitable. I guess now by this time you've actually learned how to trade, and I'm sure you're going to make money with this model, trading more. Remember, in trading, less is more. So if you have actually benefited, the only way you can actually help back with our community, with our channel, is by liking, subscribing, and commenting in case of any question. Yeah, we meet in the next video. Thank you.